Welcome to the Injury Law Pod, the podcast that explores and demystifies the complex world of personal injury law. Each week, Missouri personal injury attorney Eric Bartlett dives into the legal issues surrounding personal injury cases to help you understand your rights and options when seeking justice and compensation for personal injuries. So sit back, relax, and let's explore the world of personal injury law together.
Hello and welcome back to another episode of the Injury Law Pod. I am your host, Eric Bartlett, 28-year personal injury lawyer, and this is the podcast where we talk about all things personal injury law related and even a little bit beyond. Today's a little bit beyond, although very much tied to the personal injury law world. And we're going to be talking again about insurance and specifically two different areas of insurance. We're going to talk about homeowners insurance today and the alarming trend in rising insurance rates for homeowner coverage and the fact that it's leading to a lot more people going without homeowners insurance, which is a very scary place to be. And we'll dive into that and why it's important that you have homeowners insurance, how it covers not only your home, but also potential liability that you have if you're negligent in some way. And also some things to think about if you are facing these increasing homeowner insurance premium rates and trying to figure out how you can maintain coverage and still keep it. Maintain coverage, but not get absolutely killed on the premium. And also today, we're going to talk about a recent report that came out listing the top insurance companies as rated by automotive collision repair specialists, or in other words, body shops. So every year there's a survey done of over 1,000 body shops, people that deal with insurance companies regularly, probably as much as personal injury lawyers. So they know companies well. They know the ones that are painful to deal with, and they know the ones that do a good job. So those are the topics up on the table today, and we're going to jump right in. So let's talk about homeowners insurance coverage. Why is it important? Why do you need to have it if you own your own home? And of course, when we talk about owning your own home, the vast majority of people don't truly own their home. It's certainly titled in their name. There's a deed that is filed and shows that they're the owner. But on that deed, there's usually a mortgage company because most people have a mortgage on their home. And as time goes by, for the vast majority of Americans, the home is the greatest asset they will have. For most people, their home is their nest egg, right? You're going to get to a point where possibly at some point you're going to downsize, you're going to sell your house, you will have built up equity in your home, and you have money coming to you from the value that you have seen in that home that has risen over the years that you've lived there. And so it is, again, for most people, the most valuable asset they have. And so the idea of not protecting that asset is a really scary thought. But unfortunately, because homeowners insurance premiums are rising dramatically, a lot of people are being forced essentially to go without. And the stats are not good. So if we look at this, basically over the last 5 years, the homeowners insurance premiums have risen nearly 40%. 5 years since 2019. So that is dramatic. Now, there are some states where people are facing premiums in the tens of thousands of dollars. And that's crazy. I mean, that really makes it a strain. It really affects people's ability to even consider buying a house in the first place. So now, not only do we have higher interest rates, but when people are doing the math, trying to figure out if they can afford a home, they've got to factor in something that used to just be a given and not really the biggest factor in the purchase of a house, but it's these premiums for insurance coverage on their homes. And so now the stats are showing 12% of Americans don't have coverage on their homes. And this is the most that have been uninsured on their houses in a very, well, I think forever. So we're in a real crisis situation. And, the cost, why are these rising so dramatically? A lot of it is due to the natural disasters that have been occurring more frequently, and these big losses that are being submitted to insurance companies, the payouts that they're having to make. Everything is more expensive at the moment. So when it comes time to provide the rebuild cost, the cost of materials, the cost of labor, all of that is up. So everything is leading to these insurance companies working to cover these losses. Because obviously, like I've talked about before, insurance companies are in the business to make a profit. They're not there for or out of the goodness of their hearts. They're a business. And so when they're having to pay out big time, they're going to make it up on the premiums that they receive. So we have a real situation here where a lot is going on, a lot of payments are being made, and then they're trying to make it up on these premiums. And again, in certain states, due to particular natural disasters, right, that hit those places and the risk that it's going to happen in the future, that is where the largest increases are being seen. Even here, we have the risk of tornadoes, severe weather, wind damage, hail damage, all of those things. And so, we cannot afford to put our largest asset at risk. The other thing, and this is more in the personal injury world, the other thing a lot of people don't realize is just how much your homeowner's insurance coverage will cover you if you do a negligent act that causes injury to somebody. And so basically, if it doesn't involve an automobile, then your homeowner's coverage very well may protect you if you do something negligent. So what are some examples that I've personally seen, I've represented people on? For example, as you might imagine, dogs, right? If you have a dog, and whether that dog's at your house, whether that dog escapes your house, whether you're out on a walk on the sidewalk with your dog and it attacks somebody, in any of those scenarios, your homeowner's insurance company or your homeowner's insurance coverage is most likely going to cover that incident and protect you from liability. Now, having said that, over the years, certain dog breeds are specifically excluded in insurance policies. I've talked about that on previous episode of the podcast where we specifically talked about dog bites, dog attacks. But generally speaking, you're protected out there in the world with your dog if for some reason it causes injury under your homeowner's coverage. Another thing somebody might not even think about, but we've had cases on, is a hunting accident. So we've had cases where people are out hunting. There is a negligent shooting of someone, and the shooter's homeowner's coverage provided insurance protection on that claim. And people don't even necessarily realize that's a scenario that homeowners insurance coverage can provide coverage on, but it is. Homeowners insurance coverage can also encompass, something, maybe you're mowing your yard and, the mower throws a rock, something like that, and causes injury to somebody. That would be a scenario where your homeowner's insurance might provide protection. Maybe you have an ATV or something like that. You use it on your property. There's a chance that that's going to be covered under your homeowner's insurance if somebody gets injured on that homeowner or on that ATV. And usually with homeowners coverage, there's also medical payments coverage or medical expense coverage, which is no fault insurance provided to somebody that gets hurt on your property. There's always two parts to insurance coverage. One of those is the liability coverage. That's where somebody has to prove you did something wrong, and then that coverage comes into play. The other one is no fault insurance, called medical payments or medical expense coverage. That's if somebody just gets hurt on the property at no fault of yours. There's money there to help them pay for medical bills. So there's a liability coverage protection that goes with homeowners insurance. And it's really important because, again, if you don't have it and somebody makes a claim against you, you're going to have a problem. And you could risk personal liability, personal financial problems because of a claim that isn't covered by an insurance policy. So these are the big reasons why you've got to have insurance on your home. I mean, again, you do not want to lose your home and have no way to rebuild it. I've seen it. I had a family member that found themselves in this situation, and it was really sad because they did not have coverage after a fire to rebuild their house. And there they sat with a worthless piece of property and nowhere to live. They now all of a sudden they're without a home and they're scrambling to find some other place to live. And it created a very, very bad situation. So what are some things to do to try to counter these high insurance rates so that you can keep coverage but afford it? You got to look at your policy. You got to make sure you're not paying for things on a homeowner's insurance policy that you may just not need. Sometimes there's jewelry policies, things like that you might be paying for that you really don't need. So you need to go through line by line on your homeowner's insurance policy. You need to make sure, again, the home is covered. You do have personal property covered. Again, things in your house, TVs, furniture, kitchen items, things like that, right? There's going to be a coverage to cover personal property, and that's important. But there can be coverages on there that you may not need. You want to also make sure that you're not overpaying for the value of your house on your insurance coverage. Now, again, be very careful because the cost to rebuild today is very expensive. And so you can't just factor in, thinking, well, I think my house is worth X, right? Based on what I've seen houses selling in the neighborhood. That's not necessarily the true value to rebuild your house. Because again, rebuilding is more expensive. So, tread carefully when you're looking at that, but make sure you believe that the value that the insurance company has on your home to rebuild it isn't grossly inflated. And a lot of insurance companies usually have some provision to pay about 20% more than the value listed on the coverage. So for example, if the coverage, and I'm just making a nice even number here, if the amount listed for the replacement value of your home is $100,000, a lot of companies will say, we'll pay you up to 20% more of that in the event the cost to rebuild exceeds that 100,000. So 120,000 is what they're willing to pay up to. And so if you factor that in, make sure you have that first. And if you factor that in, then maybe that helps you lower the value they have on your home, which will lower the premium as well. The other thing is check your deductibles. So if you don't fully understand what a deductible is, that is the amount of money the insurance company is going to require you to pay on a claim. And you have to pay that amount in order to get the coverage. Now, typically the way it works is the insurance company will say, okay, we value your loss at, again, let's say it's $100,000. I like that nice even number. And let's say you have a $500 deductible. Well, they're going to pay out $99,500 on the claim because they're going to subtract your deductible. So usually speaking, you're not paying out of pocket on that. But again, not always. Roof claim, let's say you have a roof that's damaged by hail or wind, and you have a roof claim. A lot of times the roofing company, they're going to get a check from the insurance company for what the insurance company wants to pay. Okay. And then they're going to look to you to get the deductible amount. So now you do have somebody looking to you specifically for that money. So with that in mind, sure, look at the cost savings with a higher deductible. So meaning you're going to be out of pocket more money if a claim is made. So for example, instead of having a $500 deductible, which a lot of people have, that's pretty standard. See what the cost savings is on the premium to bump it up to $1,000. Okay. And I mean, sometimes that bump can save you 20% on the premium. And so it can be a decent savings, but you got to remember someday, if you ever have a claim, you may have to go out of pocket, not $500 now, $1,000. So make sure you can afford it if something happens. Because again, you don't want to be in a position where you can't come up with the money for the entire claim to get covered, or it's going to be an extreme hardship on you to come up with the money to make that claim and get the bulk of the claim covered by insurance. And again, if you're at $1,000, there's all kinds of levels of deductibles. Usually it'll bump up then to $2,000 or $2,500, something like that. Check it out. Again, it depends on your personal financial situation and what you can afford. And make sure it makes sense to have that much going out of your pocket if a claim is made based on the savings you're going to see on a premium, and then make the decision. So that's another way to try and save on that homeowner's insurance premium if it's going up and getting difficult to afford. So remember, you can take a look at your coverages, the amount of your coverages. And again, just like on the personal property coverage that you have with your furniture, appliances, electronics, things like that. I mean, make sure that the coverage matches what you really think you have in your home. It may be way more than you realistically need, but again, don't undersell yourself and think, oh, no, we don't have that much, because when you start going through and adding it up, maybe you do. Again, we're talking about the cost to replace stuff, right? And so you want to make sure that if you have to go out and start buying all new stuff, you've got it covered. Because again, it could be tens of thousands of dollars. So make sure your coverages are in line, and then again, check that deductible, because again, this is such a crucial piece of your financial picture and protecting yourself and making sure you have the coverage for your assets and to protect your assets if you get sued for some negligent act that you've done. Don't be part of this 12% of people that are risking everything in the hopes that nothing is ever going to happen. Because I see a lot of times Murphy's Law, if something bad can happen, it will. Seems like when people don't have insurance, that's when something happens. We all go along, we pay all this insurance, these premiums forever, life is fine, nothing happens. You think, why do I pay all this money for insurance? And as soon as you don't have it, boom, there's the issue. So I hope this helps you on the homeowners insurance front, because it's a really important piece of your financial portfolio, if you will, the ability for you to protect yourself. Okay, so let's talk again about auto insurance companies. Talked about it on previous episode and about the rising insurance rates for automobile coverage. Same deal, because we got claims being made. There's more expense in the parts, the labor, all the things. There's a lot of factors going into the increased auto insurance rates. But there's a new report out just talking about quality of insurance companies. So every year there is a survey of over 1,000 body shops that ask them to rank insurance companies based on quality of repairs and customer service for motorists. So essentially, right, what insurance companies are good at handling claims? They do it well. They provide the service, they don't jack around, they get it done. So every year this report is put out based on the survey results. And man, do I have a shocker for you. More than likely, the insurance company you have right now didn't even make the top 50 insurance companies on this list. So all the big boys that we see all the time on commercials. So when you see the Gecko and you see Flo and you see Mayhem and you see the guy at Farmers, I don't think he has a name. All these companies, right? Oh, Jake from State Farm. How could I have forgotten him? My goodness, right? None of these companies make the top 50 insurance companies on this survey. So what does that tell us? It tells us that marketing works, because these are the companies that are in front of us all the time. These are the only companies we think are out there, right? These are the tops. So why would the average person have any reason to go out and find these other insurance companies that actually provide top-notch service? And again, I see it as a personal injury lawyer. Now, unfortunately, I deal with all these bottom feeders all the time, because that's what the majority of people have. I do know that's what the majority of people have. That's all due to advertising. But I do occasionally run into these unique companies, the ones that we're not so familiar with, and I am always impressed that it's a much better experience. We have to file less lawsuits against these companies because they pay claims in a reasonable fashion. Again, I'll never be a fan of any insurance company. I have been known to affectionately refer to them as Dr. Evil. But you want the ones that are going to do the best job in the situation, right? Not the worst job. And so all those major companies basically got D's and F's on this report. So who gets A's and B's? Companies like the number one company, North Carolina Farm Bureau. Never heard of it, right? Now, I don't know. Do you have to live in North Carolina to get their coverage? Possibly. But number two, Alpha Mutual. You've never heard of that, I'm sure. Nope. Chubb, number three. Chubb is big on providing insurance coverage to more affluent, wealthier individuals. So they're out there. I do see Chubb from time to time. But then there's like Erie Insurance, I think probably out of Pennsylvania, Michigan Farm Bureau, right? See, a lot of these kind of more localized companies. Acuity is a big one that I actually see more often. They provide a lot of business insurance, and they came in at number 6. And then it just goes down. North Star Mutual, Rural Mutual, Mutual of, I don't even know if I can say this name, Enumclaw. I don't know where that is. Grinnell Mutual out of Iowa. I see them quite a bit. So you need to take a look. We're going to link this list in the podcast notes. You need to take a look. Here's the thing. Remember this. Cheapest premiums are not indicative of the best company and the best coverage. And when you're in that moment, rubber hits the road. Either way, you've got a claim to make on your own insurance. You're hit by an uninsured motorist. You're dealing with your insurance company, or you're involved in an accident with another motorist who is at fault, but they don't have sufficient coverage for your injuries, your property damage, whatever it is. And you got to rely on your own coverage. You want the good coverage. You want the company that is going to deal with you in the best way possible. So that's why you need to look at these companies, these ones you've never heard of. And you might be surprised. It doesn't mean that they're dramatically more expensive than these low-ranking companies that we always see. You may be pleasantly surprised. You may be able to get yourself a quality company at a good price. And if the moment of crisis occurs, you truly are in good hands, unlike the company that advertises that. So this is all important. And by the way, another little tail on all of this is, with homeowners coverage and auto coverage, it usually pays to have all of that with the same company. So keep that in mind, because you get greater discounts when you do bundle all of your insurance together. So make sure you're shopping all of it together, home and auto. If for any reason you own a boat, marine coverage, motorcycle, all of that, try to get it all together. You will get the best rate possible. And remember this as well. Don't let loyalty get in your way. So if it's been 3 years or longer since you've shopped insurance, you need to shop insurance. There is no future in loyalty to insurance companies, because insurance companies very well may not be loyal to you when the time comes. So they keep bumping up premiums over the years. But when you shop and you're looking to be a new customer, that's when they give you a deal and you start lower. And again, they may bump you up over the years. That's when, after 3 years, you take a look at everything, see what's out there. I hope this podcast has been another benefit to you. We're all facing these rising costs with insurance, so we've got to figure out ways to handle it without getting rid of insurance. Just can't do it. Cannot. Take that away from this podcast, if nothing else. You have to have coverage on the things that matter materially in your life, but also the people. But that's a whole nother story. Life insurance, right? But that's not really my world. So with that, I'll end another episode. I hope you found it informative. If so, I always ask for a 5-star review. And if you have any injury claim, something pending out there that you're not sure about how to handle, we're always here. Free consultation. Feel free to reach out. And until next time, be safe, be well.